Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, Powell's remarks are eyed, investors watching out for any clues as to where interest rates are heading. Meanwhile, oil prices are struggling as concerns about waning demand from China and the US reemerge. And earnings galore, we're looking out for Lyft, Disney and AMC amongst the big names reporting. Now, good afternoon, I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, this is how equity markets are looking, starting with Wall Street, which mirrors the Dow Jones Industrials, as you can see there, ticking slightly higher ahead of the open. Let's give you an hourly, actually a minute chart there to give you a better indication of the direction of travel. Similar picture as well for the Tech 100, which mirrors the Nasdaq. Just bringing that up for you right now. Here you go, US Tech 100, also ticking slightly higher, changing direction as we wait on those remarks from Powell. This is the US 500 for you. As you can see there, it has seen quite stellar gains recently. The question now is whether or not stocks will rally. We don't just have JP's speech. We also have another key Treasury auction later in the day. Still, cautious comments from several bank officials. This is central bank officials over the past few days have kept investors on edge, with Fed Governor Michelle Bowman flagging the possibility of further rate hikes given the strength of the US economy. For more on what to expect, let's join Chris Vecchio now from Tasty Live, part of IG in New York. Thank you so much for joining us so early in the day, Chris. What are you expecting to hear from Powell?
Well, not much different from what he told us last week. It's important to remember that these Federal Reserve officials move rather glacially, and it's only been a week since we last heard from Fed Chair Powell himself. But it was at that November FOMC meeting that we did hear that the rate hike cycle is more or less finished. The Fed, of course, can't say that outright and directly right now. They are the generals fighting the last war, as it were. They spent too much time in 2021 telling us inflation was transitory. And so in an effort to restore their credibility, they will pay lip service to keeping rates higher for longer for the foreseeable future. That said, though, the writing is on the wall. The Fed is probably done. The move in the bond market that we've seen in recent weeks and months has gotten to the point where the market's done the heavy lifting for the Fed. So I would expect a largely balanced tone from Fed Chair Powell, just like what we've heard from all the other Fed officials that have been on procession this week. It's worth noting that we'll not only hear from Fed Chair Powell today, but we'll hear from him again tomorrow. Next week, we have the CPI report, of course, and what should be a little bit of a relaxation in headline inflation pressures. I would caution, though, the next few months are likely to remain turbulent as base effects don't roll over until 2024. In any event, bonds and stocks see no reason to make a big move before Powell's speech, and I don't think they'll be making a big move thereafter.
Now, many traders we've been talking to have been saying they're watching out for any remarks that point to a springtime cut. Is that what you're hearing your side too?
No, Powell and co. have not indicated that a rate cut is coming anytime soon, although the market certainly thinks that it's possible. According to the CME FedWatch tool, which measures the difference in Fed futures contracts, we see that there's, roughly speaking, a 20% chance of a rate cut by March. That doesn't seem likely given the Fed's tone, although historically that actually matches up very nicely with what the Fed has done in the past. The time span between the final rate hike and rate cut historically has been about 8 months. And so if you go 8 months beyond July 2023, that brings you to that March 2024 meeting. I personally think the Fed will wait until inflation is done and dusted, until they have credible evidence that we're back to 2% on a sustainable basis. The first rate cut is more likely to arrive in June of next year.
Thanks very much, Chris. I'm sure we'll be checking in with you ahead of the inflation numbers next week. Just a reminder, JP speaks 9:15, that's 14:15 GMT. And also a little later in the session, he's due to speak at another conference on Thursday. Now, just checking in on earnings, we're waiting on Lyft's earnings after Uber's in the previous session. Analysts expecting Lyft's revenue to have grown 8% in the quarter, thanks to strong demand for ride-hailing services. This is as more workers return to the office and people go out a bit more. Investors watching out for any comments about further growth ahead. Taking a look at the chart here for you, we are seeing that Lyft has been, that's the minute view. Lyft, of course, all sessions on the IG platform. Let's get you a daily view here. Lyft did sort of get a slight uptick there after we saw Uber's earnings. Uber on Tuesday predicted strong holiday quarter demand would drive up profits more than expected. Here's a look at Uber's shares for you, also all sessions. Now, Biogen has cut its annual profit forecast below Wall Street expectations. This is on rising costs related to the recent acquisition of rare disease drug Reata Pharmaceuticals and the launch of its Alzheimer's treatment Leqembi. Just checking in on Biogen as well, because we are keeping an eye out for that stock when it starts moving. Also wanting to check in on Warner Brothers Discovery as well, because it's just out with results. Warner has said that Barbie has helped its earnings, Q3 profit topping estimates thanks to the very successful movie. This helped offset a sluggish advertising market. And in a time when studios were starved of content due to those strikes in Hollywood, overall third quarter sales of almost $10 billion was in line with estimates. Now, the release of movies like Barbie, Oppenheimer, Mission Impossible, and also The Sound of Freedom has added to the uptrend in the cinema space. Whilst we are touching on that, I also want to say that we're looking out for AMC. AMC Entertainment seen reporting a 30% rise in quarterly sales to $1.2 billion from $968.4 million a year ago. This is according to the mean estimate from 6 analysts based on LSEG data. Now, Walt Disney is expected to report a rise in Q4 sales thanks to strength in streaming and its park division. Just having a look at the House of Mouse's shares here, because Walt Disney has just celebrated its 100th anniversary. It also has seen a CEO change, some tricky times as well in the last few years, no thanks to lockdowns. But also, as people emerged, they had to try and get their parks up and running as soon as possible, whilst also trying to boost numbers in the streaming space, which is very competitive. And beyond meat, we're also looking at this company because we are looking for it to say third quarterly sales rose 3.5% to $85 million from around $82.5 million a year ago. The current average analyst rating on the shares is sell. Beyond Meat, of course, is the company that sells meat that isn't meat. I haven't tried it myself, but I have been told that it is pretty close to the real thing, although I'm not sure I can vouch for that until I actually try it. The mean earnings estimate of analysts was unchanged in the last 3 months. Meanwhile, oil prices also of interest, given they are struggling after sliding to their lowest levels in more than 3 months in the previous session. Concerns over waning demand from US and China pretty much down to that move. IG's Axel Rudolph has been looking at the technicals surrounding WTI.
Yes, Angeline, the crude oil price is really interesting because yesterday we dropped by about 4% on much higher EIA inventories in the previous week by about 12 million barrels, and that pushed the price down. Also, the EIA basically reviewing its forecast of consumption with regards to this year to a drop by about 300,000 barrels per day in the US compared to its previous forecast of a rise of about 100,000 barrels. And all of that added to demand concerns to do with weaker China data earlier this week has led to the price of WTI, as you can see here on the daily chart, falling through not just the August low at $77.60, but also through the red line here, the 200-day simple moving average at $78. And it looks to me as if that trend is likely to continue and may take us soon down towards the highs seen of this sideways trading range pattern between May and June we saw earlier this year, between basically $74.70 and around the sort of $68 mark. So it is quite possible that over the next few days the oil price will continue to slide, touch the $75 mark, and then perhaps over the next few weeks head much lower towards the $70 zone.
Thanks very much, Axel. Now, before we go, a last look at how the market is looking. Here's the Wall Street, which mirrors the Dow Industrials, and it is ticking higher, slightly higher, it must be said, not a huge amount. Same story for the S&P and also the Nasdaq as we wait on Jerome Powell's remarks in the not too distant future. Now, just a reminder, that's it for this edition of Beat the Street. However, I will be back again at 13:30 to help you position yourself ahead of the opening bell. And my colleague Jeremy Naylor will be doing the same at 7:30 ahead of the European market open. For more insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.